Hello, I'm John Petrucci, Senior Vice President of Customer Service. Welcome to the Second Quarter Connect Phone Conference. We appreciate you taking some time out of your busy schedule to spend with us today. If you happen to be on the 11 a.m. call, our apologies for the technical difficulties that we encountered. The purpose of these calls is to provide you with live updates from the senior leadership team here at State Auto. After the updates, we'll open up the call to questions from you. To send us your questions, text State Auto, one word, to 22333. You'll be able to respond with a question using 160 characters or less. You can also visit pollev.com/stateauto, where there's no character limit. Please note that a recap of this meeting, along with an audio recording, will be made available within a few days on our agent platform, State Auto Connect. Joining us here today on the call are Jason Berkey, Senior Vice President of Personal Lines, Steve English, Senior Vice President, Chief Financial Officer, Kim Garland, Senior Vice President, Commercial Lines and State Auto Labs, Paul Stachura, Senior Vice President, Chief Care Officer, Greg Tacchetti, Senior Vice President, Chief Information and Strategy Officer. And to kick off the meeting, here's our President, CEO, and Chairman of the Board, Mike LaRocco.
Thank you, JP, and good afternoon, everybody. Let me add my apologies to those of you that were scheduled to be on the 11 o'clock call. We're kind of priding ourselves in becoming a much more tech-savvy organization, and to not be able to connect today was a frustration, and our appreciation of your patience with us. And if any of you listen to this on a tape basis because you couldn't make this time and want to reach out to us, we'll make arrangements to make sure we get back to you. I am actually super excited to be speaking to you today. I hit my 3-year anniversary on April 27th. And as I look back over the last 3 years, as you're apt to do on anniversaries, I could not be more proud of the associates at State Auto and all of you as our agent and distribution partners all across the State Auto territory. We have truly come a very, very long way. I'm not going to recount those 3 years, you'll be happy to know, but I will say this about looking back. We've made a number of bold decisions on changing the direction of this organization, the technology platform, the businesses that we chose to stay in and those that we chose to exit. And we did those things because we knew coming on board that after we inherited an organization that had, been a long time since it had made a profit and had been a long time since we were able to grow our policies in force, that incremental or modest change wasn't going to get it done, that we had to be much bolder. In addition to what was kind of inherited, we also kind of looked out the front window as well, and we saw a change coming to our industry with regard to technology, with all the changes in terms of artificial intelligence and sensor-based products and big data and all the other things. And we also wanted State Auto to be prepared for that. So our decisions were made because not only of the history of poor performance, but a view of the future that said we were going to be seeing a significant amount of change in this industry. So we had to turn around the organization and prepare it for a very different future. Along the way, I'm sure there were times where there were times when all of us weren't real sure that we were going to get there. I think this first quarter of 2018, which Steve will cover for you in just a minute, was the clearest indication yet to me that we have indeed not only brought this company back, and we're not quite there yet in terms of the turnaround, but have brought this company back to a place where we are relevant in the marketplace. We are being sought after by agents. We are being looked at by competitors. And that's a very, very good feeling. We're growing again. I can say that with a lot of pride because it's been a long time. And a lot of thanks, because none of this would have happened without your patience, without your support, and quite frankly, the vast majority that embraced all these changes. You understood, as we did, that they were necessary. And I think together we are poised right now as never before to really be a significant force in the P&C industry space. And so I'm excited about it. I'm looking forward to answering your questions. And with that, I'll turn it over to our CFO, Steve English, to briefly take you through the first quarter numbers. Steve?
Okay, thanks, Mike, and good afternoon, everybody. First quarter 2018, we did start to see improvement in our results, especially as you compare it to the first quarter of a year ago. Now, if you follow us through our public company disclosures, that might be a little hard to see because we actually reported a $2.1 million net loss yesterday. Compared to a year ago, it was $3.3 million net loss. But what we had to do this quarter for the first time is some new accounting for investments. And had that new accounting not put in place, we would have had $10 million of net income in the first quarter of 18 relative to the $3.3 million loss a year ago. So the turnaround is starting to take hold. And you can really start to see that in the combined ratios in terms of their improvement. On a GAAP basis, we did report a 102.6, but that was 6.1 points better than a year ago. Mike mentioned our runoff businesses, the specialty segment, when you exclude those. So when you look at just our go-forward products, first quarter on a stat basis, the combined ratio was 101.4. So you can see that the specialty exit is creating a little bit of drag on the numbers. Some other items of note. Personal lines came in at a 97.9 combined ratio, so an underwriting profit. Auto still above 100, although just slightly, 101, but it's improving. Commercial lines, combined ratio was flat at a 106, but within that, commercial auto, workers' compensation, and farm all had underwriting profits. Our small and mid-commercial products had a tough quarter with some cats and non-cat weather activity. Production has been strong, as Mike mentioned. Personal lines up over 22% and commercial lines up over 7%. So let me add my thanks to you for all your hard efforts on that. And our balance sheet remains strong, as evidenced by the fact that this was the 6th consecutive quarter we have reported favorable development on our prior reserves. So all in all, a good start to the year, good improvement. And with that, I'm going to turn it over to Jason.
Thanks, Steve, and good afternoon, everyone. At State Auto, we truly value our agency partners and appreciate the feedback that you provide, both good and bad. Let me personally assure you, we are listening and we hear you. Each month, and sometimes each week, the State Auto Technology team releases improvements to our system based on your feedback. As a shining example of how this process works, I want to highlight just a few of the items that have been launched or will be released later this year. The first area involves our e-signature process. There is a boatload of e-signature enhancements that were released earlier this year to make the process simple, clear, and easy to complete, separate from our registration process for new customers. We are very pleased with the impact these enhancements have had thus far. And later this month, SMS texting of the e-sign link will be implemented to increase the take-up rate with insureds and have an even greater percentage of them click the e-signature link to sign their new policy. With the new process, we have seen that once the link to the new process is clicked, basically 100% of those insureds will finish the e-signature process. The second area is around billing. We have heard a strong need for agents and insureds to be given the ability to update Connect billing information and make a one-time payment on a self-service basis. The first step to address this need will come later this month with a new one-time payment self-service feature for Connect, with self-service capability for updating billing information to come in the months that follow. The last area is around enhancements to our agency portal itself. Our Connect portal has seen great adoption and acceptance, and we're very pleased with the level of quote activity and new business. There are a few recurring points of feedback on the portal we need to address later this year when we launch what we call Portal 2.0. And the big three requests that we've seen around enhancements to Portal really come from more information on the reports that are run in the evaluation of the risk to help you have a more informed conversation with the potential insured. The other area is easier multi-policy quoting. So the information that you enter in an auto quote should easily transfer over to a home quote so you don't have to do any additional entry and the appropriate multi-policy discounts are applied. And the last would be a clearer entry process for prior carrier info. Now, There's been a wide variety of feedback beyond that. So again, all of these 3 key items will be in there and more with the release of Portal 2.0 later this year, with increased speed, stability, and streamlined workflows from screen to screen. In the coming months, we will share more information, including videos showing a demo of Portal 2.0 as we approach this exciting update, which will make quoting State Auto even easier, so stay tuned. While work still remains to fully restore profitability, as Steve outlined, I am pleased to report that first quarter 18 was the second quarter in a row that personal lines achieved a combined ratio below 100%. The personal lines loss and LAE statutory combined ratio was 97.9%. At the same time, thanks to all the efforts of our associates and agency partners, we are seeing the first signs of growth. Starting in August and continuing through April, personal lines policies in force have increased for 8 straight months, which we believe is the beginning of a sustainable streak of growth in our PIF. The growth over the last 8 months is the first time policies in force have grown in several years. And in April, we were PIF positive on a year-over-year basis, a very important landmark on the path to profitable growth. Our written premium growth has been even more dramatic, with personal lines written premium up over 20% in the first quarter versus first quarter of 17. These promising growth numbers come in large part due to the success of the launch of our new digital products over the last 18 months, and our agency partners embracing this new way of doing business. In the first quarter, quotes were up over 50%, and new business counts were up over 125% over first quarter of last year. In addition, one of the most pleasant surprises on the new business front is that nearly 30% is being written under Safety 360, our auto telematics offering. We hope to duplicate this level of adoption with Smart Home over time, starting with a pilot with Roost, who is a smart battery replacement manufacturer, later this month in 2 states, Ohio and Illinois, where we will offer smart home devices with new business policies for those who opt in. Looking even further ahead, I know many of you have questions on what State Auto will do with our legacy book. The original launch of our Connect digital products was exclusively focused on true new business. We have now reached a point in our launch where we can retool Connect in order to better facilitate rewriting legacy policies. Our first goal in all of this is for you to maintain your customer. Ideally, you will maintain those customers with State Auto, although we recognize that may not be possible in all cases. To be clear, our agency partners will play a key role in the conversion process, as we need your involvement to collect the insured's email, review coverage options with the insured if necessary, and then collect updated billing info. We want to make this process as streamlined as possible for our agent partners. Our current thought process is that the legacy conversion will unfold in 3 phases. Phase 1, which is in progress, is where we will revise the Connect product for State Auto prior carrier to factor in terms of tenure and other features, as well as to pay a new business commission on any legacy to Connect rewrite. Now, hopefully later this year, we will enter phase 2, where we will add a feature to make legacy to Connect rewrites even easier, such as a rewrite dashboard or a rewrite button, to pull legacy data into Connect automatically for easier quoting of rewrites. At the same time, since in some cases our legacy commission differs from the Connect commission level, we will set up a process where the Connect commission on a legacy rewrite will automatically match the commission level on the expiring legacy policy. In phase 3, we will be notifying our agent partners at least 12 to 18 months in advance of entering phase 3. And phase 3 will be the process to close our legacy book in each state. Some smaller states will go much earlier, but our goal is to complete all conversions and retire our legacy system entirely by December of 2021. At every step, we will be transparent and clear with our agency partners about the conversion plans for the legacy book to allow you to make informed decisions. We look forward to continued partnership and to your continued profitable growth with State Auto. With that, I'll turn the call over to Kim to comment on commercial lines.
Thanks, Jason. These are exciting times for the commercial business also. If we look at first quarter 18 versus first quarter 17, our total commercial written premium is up about 7.5%, and our commercial new business written premium is up over 20%. The good news is on loss ratios, they're generally where they need to be. As Steve mentioned, 1Q18 was hit by non-cat weather property losses, a higher than normal amount of both freezing claims and fire losses. But as Steve also mentioned, our combined ratio was 106 in the quarter. This was driven by these non-cat property losses and, as we have talked about before, expense ratios that are much higher than they need to be for commercial lines. Commercial lines is about a year behind personal lines in rolling out the Connect platform. So the Connect platform has rolled out in 13 states for BOP and commercial auto. Here are some of the early results. Excuse me. We've gotten excellent feedback on the technology itself. People like the design and how it is working. Our commercial auto new business is up about 50%, and BOP new business is flat. We are finding that the system is more accessible as we are getting meaningful, small commercial new business production from agents who have not traditionally produced commercial business with State Auto. We've also found and heard that the rates are good in some places, and we have missed in some places. Generally, as risks get larger, we get less competitive, and we have identified some things in the BOP model that can be improved. We also know that Umbrella not being on Connect, it is scheduled to be launched in September, has also created issues. We also have heard and know that as commercial risks get larger, there are billing and process issues that need to be refined to better meet the needs of this market. But overall, we are thrilled with the start that we have gotten. We are following a trajectory very similar to what our personal lines brothers and sisters did. But what comes next? In May, we are going to launch 5 more states, and in June, we will launch Texas. In addition to launching new states, we will launch an updated BOP model and other pricing segmentation changes for the new states that should make us much more competitive on BOP. This refreshed model and pricing will be rolled out to the existing states over the next few months after May. In July, we will launch 5 more states and also implement the automation of Clue. And in September, we will launch the remainder of the states, except for North Carolina Auto, and we will also include and launch Umbrella at this time. What's going on in middle market? The launch of Connect has freed up the time of our commercial underwriters to focus more on middle market specific risks. I am excited to tell you that middle market new business premium is up 29%, 1Q18 over 1Q17, and total middle market premium is up 12%, first quarter of 18 over first quarter of 17. The team has been working really hard to try and reduce and eliminate inhibitors for our field commercial team that have gotten in the way historically of them writing more profitable middle market business. The data shows that this work is starting to take hold. For Connect in the future, what's going to go on? Right now, teams have started work on the core systems for CPP, Farm and Ranch, and workers' compensation. You can think about it this way. In 2018, we'll work on the core system for those products. In 2019, we will roll this out to the states. And in 2020, we will accomplish world domination of these product lines. So with that, I would like to open it for Q&A. And as a reminder, to send us your questions, text State Auto, one word, to 22333. You'll be able to respond with a question using 160 characters or less. Or you can also visit pollev.com/State Auto, where there's no character limit. And with that, we'll start the Q&A.
Thanks, Kim. Our first question, I heard a rumor in certain states that you're non-renewing the personal lines legacy book. Do you have plans to do that in Ohio?
Hi, everybody. This is Mike again. The answer to the question is no, but obviously I'll provide some context. In Georgia, we made the very difficult decision to non-renew our legacy business. In the state of Georgia, it's a very difficult environment in terms of getting an adequate rate. I could be wrong. I'll look at Jason. I think over the last 10 years, we've lost north of $30 million in the state of Georgia. And you just can't be a fiscally responsible organization and continue to write business at a loss. We did everything we could over the last couple years to try to, in quotes, save that legacy business. We spoke to the department. We tried to get adequate rate to stay on those risks. That was not possible. So we went ahead and launched our new Connect product, which we believe is properly priced to produce our targeted underwriting profit of 4%. And as a result of that, we've had to go in now and begin the non-renewal process of the legacy business in Georgia. That is a single unique state. There are no plans, obviously, to non-renew. As a matter of fact, as I think Jason very well laid out for you, what we're really hoping to do is keep all that legacy business and get it onto the new digital platform. And we're providing, I think, the right support from a technological standpoint as well as a financial standpoint to have you help us in that goal. So that's what we did in Georgia. That's why we did it. That process has just begun. I think the first non-renewals won't happen for another 90 days approximately. So we're still in the early stages. Our agents have completely been informed. We've been, as we are with everything else, very, very transparent about our decisions. Okay.
And just to clarify on Georgia, it's legacy auto only. We're actually not doing anything to the home or dwelling fire or any of the other products. It's an auto only action in Georgia.
Next question. Please provide a real-time phone resource for agents to resolve complicated billing, claim, and policy issues. It's frustrating when you can't reach someone when issues occur or the resolution comes 3 days later.
Hi, everybody. This is Greg Ticchetti. First, I want to sincerely apologize for the state of the service delivery that we've had over the last number of months. We've made a number of changes going back to late last year in January to bring a lot of staff in to help, particularly on the billing issues. So first, I want to apologize, and second, I want to talk about what we're doing to fix the issues. So as Jason mentioned, we're really excited about a new billing product that we're going to be launching here at the end of the month. We call Quick Pay. That's phase one, where both agents and policyholders will have the ability to make a one-time payment. We will continue to add billing capabilities throughout the rest of the summer in June, July, and August, where we will continue to add self-service features for changing payment plans, payment options, payment dates, and future payments. So we're really excited. We think that this is going to be well received by you all, most importantly. I can tell you now that we have what we call a customer relationship management tool in place as of last month, that about 60% of our calls today do come in on billing related issues. And as we look at that 60%, all of the calls that we generate or that are coming in today will be accommodated by the billing solutions I just mentioned over the next 90 days.
Next question. In Illinois, under the new BOP program, how come we are unable to write an umbrella? Seems like a large oversight.
So we had to make a decision like we've made with all of our launches. So we could try and put everything on the platform and try and it would take longer to launch things, or we could have launched BOP and commercial auto. We could launch things earlier, get them out in the market, and sort of learn where we hit and where we missed on those sorts of things. So a lot of the things that we do, we think about speed a lot, and speed is one of the differentiators. And sometimes if you do that, you don't necessarily create the perfect answer. Would we have loved to have launched Umbrella at the same time in the same time frame? At the same moment, yes. But we made the choice to launch those two product lines first to get something out there earlier to get experience with it.
Next question is, train company employees on the new products. It's frustrating when I know more about the new products than our support staff.
I'm disappointed that that was your experience. We're really proud of our associates, and I think that they all absolutely go through new product training. And if your experience was poor with them, then we'll certainly double and triple our efforts to make sure that their training is complete. But I can say with great confidence that we're really proud of our team in service and underwriting and in the field and their knowledge. So we'll try to make sure that gets conveyed more consistently.
More PDF help guides, product guides we can supply to clients. A better About State Auto document would help our customers get to know State Auto. Most other carriers build an About Us in the first part or last part of the PDF quote.
Yeah, I think this is a fair comment. I think that we're taking a look around the marketing side of the business. Things are changing, obviously, very rapidly. You know, the idea of the traditional point-of-sale distribution products that are paper and are designed to try to be used as handouts. We clearly don't see those as effective going forward. Having said that, we do believe that there are ways to digitally provide better information about State Auto, better support of our products, as you mentioned on there, kind of a better way for the customers to understand who we are, what we're all about, and why they should feel comfortable having you place their home auto, small commercial, whatever, with us. So we do agree with you at a high level that that type of support is something we can get better at, and it's something we're focused on as we speak.
I was curious when Kansas can expect access to the State Auto Connect personal lines products. We continue to lose personal line policies with the large rate increases that have taken place.
This is Jason. So we continue to work through the approval process with the Kansas Department of Insurance. It's been the longest laborious approval process, obviously, of any state. I'm hopeful that in the next quarter we will get the products, but I have no way to kind of force the state to approve a product, and we continue to press as much as possible. We are very responsive, and we're working diligently to get that, but it's ready to launch as soon as it's approved.
On a personal lines auto app, is 5 days going to be the norm for an underwriter to review an account acceptability? We received a reply today that said this.
It's Jason again. Yeah, I believe you're referring to a process where there's a pop-up in the quoting process that says your risk needs further evaluation. So at that time, the SLA is 5 days, and that's the service level agreement with underwriting. So you also have the opportunity to opt out if you want to abandon that quote and move on. We don't have a plan to change that. That was true in our legacy. Service level was similar.
How many get the pop-up out of 100 quotes? How many go to the pop-up phase?
It's less than 0.5% of quotes.
So it's a small number. Having said that, I think 5 days is kind of what we're working on now. We obviously would like to make that faster. I think that's something that we will strive for. It's obviously a small number, but we would like to be more responsive, and we'll do everything we can to improve that time frame.
There have been days where you can't reach an underwriter by phone. It just keeps ringing, and we end up taking the business elsewhere because no one is available to assist with new business underwriting. Also, underwriting needs better training. We have been advised incorrectly multiple times or didn't get an answer until later, days or weeks later.
Yeah, this is frustrating to see and hear, and I think Greg addressed this in his opening comments with regard to the service unit, and we can say the same thing in both underwriting and service. These folks are working really hard. It doesn't excuse anything. It's on us. It's our responsibility. It's our responsibility as leaders, not their responsibility, to be better in making sure that there's enough support from them in terms of people and time, and so we'll work harder at that. Again, the training is pretty thorough, so they should not be giving incorrect answers. we'll make sure that we spend more time there. But if you're looking for in that area, that's on us. That's all on the people that are at this table right now. It's our responsibility to make sure they have enough people and support. So we'll double down our efforts there, because we've just got to get better at making sure service, whether it's from an underwriter or service professional, is as effective as it can be.
As a reminder, to send us your questions, you can text State Auto one word to 22333. You'll be able to respond with a question using 160 characters or less. You can also visit pollev.com/stateauto, where there's no character limit. Next question: expand occupation list on personal auto. Don't write many professional athletes or politicians. We do write nurses, teachers, retail, construction, etc.
The occupation list that we provide, is the list is designed to select for what we would consider pricing differently for. If it's not an available option, then at this stage, we're not differentiating for it. So we constantly look to review, expand, improve our risk evaluation, risk selection process, and certainly occupation is one of the areas we'll continue to look to address.
Document generation and organization on State Auto Connect is very unorganized and open, and pending changes is very confusing and causes a lot of frustration.
Hello, everybody. This is Greg Ticchetti again. Jason mentioned earlier in his prepared comments about Portal 2.0. We're really excited about all of the changes that are coming with Portal 2.0. I don't want to get too technically wonky, but I will say that from an experience point of view, it will look and feel very differently, and from a response time, it'll also be much quicker than the current process. We've really listened to the feedback from all of our partners on what we got right and where we needed to make changes, and tried to bring all of that to bear with the first iteration, which will be this August for the Portal 2.0.
And I would just add that, as Jason said, many of you are sending in, your ideas. So if there's specific things about that, for example, on that last comment, in terms of the organization of materials, whatever, make sure you get them forwarded on to us, and we'll use that type of input as Greg and his team kind of redesign, and your feedback really helps us get better.
We need more support from marketing reps. When issues occur, we are unable to reach our rep. We haven't spoken with our rep for months.
I think on this one, it would be very helpful if you reached out to me, to Jason, to Kim, to Gerald Ladner, and let us know more specifically, because it's difficult to respond. Obviously, this is unacceptable. We want to make sure that our reps are reaching out and are interacting with you. It's hard to respond to this one because I don't know who specifically. I don't know if this is a broad reaction and others feel the same way. But if there is concern about the amount of interaction with reps, it would help us to have a little bit more specificity there. Just like all areas of our organization, we're now growing pretty aggressively, which is a very positive outcome. It's very exciting time here at State Auto, and that's put a lot of stress on the organization, and certainly our field people are feeling it. Again, it's not an excuse. I'm just trying to make sure that when we get that type of feedback, we have the ability to kind of speak directly to the areas who are feeling that.
Give agents the ability to see the 360 performance data. We are in the dark about the program, and customers can tell.
Telematics.
Yeah, that's telematics. It's referring to telematics. Yeah, today we don't provide information. I think it's a good thought. Obviously we provide information to the insured, and that's a big part of that program, is to make sure that how they are driving is well understood, and to give feedback so that they improve their driving. But we haven't necessarily included the agent in that process. We can certainly look to do that.
Yeah, we'll have to think about that as well, because it is personal driving information on your customer, and I don't know whether or not that would be something that would make sense or not. I'm not saying it wouldn't, but it certainly is something you could reach out to your customer if you want to know more about that. I just don't know. I just want to be really careful. I am proud to say I'm not a lawyer, and hope I didn't offend too many people on the phone, but we would want to make sure that sharing that driving information was something that we were able to do with you, so we have to be careful about that.
Yeah, that's true. But yeah, so the customer gets a score and gets some information about what they need to improve their driving, but we don't provide anything to the agent today.
For the folks on the legacy book that don't want to be paperless or go on EFT, are they going to be forced out of State Auto?
Well, unfortunately, the answer is yes, and I say I'd appreciate if you give me a second to add some context. The digital platform and the new Connect platform, doesn't allow for checks or paper, cash. So we realize that's a limiter, and that doesn't necessarily make us feel good. But kind of going back to my opening statements, we knew that we had to become a more focused and aligned organization, which is why we got out of some product lines and made a commitment to the digital way of doing business. My only request, and again, I don't want to suggest that there aren't going to be some customers who are simply going to say no, and we're going to be sad about that. But I would make sure, and we're going to try. This goes back also to how we're going to help you through this, is to try to help customers understand with confidence the paperless process and the EFT type process. So we're going to try to give you some support there for those customers who may be a little more wary about that. But at the end of the day, the answer is yes to your question.
When will commercial be available in Missouri?
I can answer this question. Missouri is one of the states that launch in May, so very soon.
The 2 full pay yearly option is something we would like to see on the personal auto product. Other carriers offer this and clients like it.
I believe that's in Portal 2.0. Yes, it's in Portal 2.0.
You may not be able to see this, but we've got a couple really smart people behind us that actually have all the answers, and they just give us a thumbs up. So that's exciting that option's coming.
Will agency billing be available for commercial lines in Connect?
So we've gotten a lot of feedback, especially around sort of larger companies that they want more flexibility or different types of billing options. So that's something that we are looking at, right? We're trying to stay true to kind of what we believe, true to digital, right? We don't want to sort of introduce paper and all those historical things, but how can we be both digital and sort of meet the needs of that particular marketplace? So we're looking at that.
How can you discontinue when an insured is a customer for life? Your new program does not have this.
I'm not sure. Oh, this was a program. What was it called?
It was called Friends for a Lifetime.
Okay. So I think you're talking about a program that we had certainly prior to my time where someone could be a customer for a lifetime. And it would be unfortunate if we lost that customer, but we are not saying that they can be a customer. Unfortunately, if they want to continue to be a customer, they just have to be willing to accept to do their insurance business in a digital format. So we certainly aren't discontinuing our commitment in terms of their ability to stay with us, but they do have to accept the new way of doing business.
In Michigan, can we expect the transition away from the legacy system on home products to begin? When can we expect the transition?
The question is about the launch of homeowners in Michigan. That is also in May, I think on the 24th of May. Beyond that, if the question's more about conversion, I'll just refer to what I mentioned earlier. It'll be similar to other states. We'll have the 3 phases.
Yeah, since we're just launching home in Michigan in May, you can expect it to be a little bit further down the road. We like to make sure we give a time in between the launch of the new platform and the conversion of legacy customers.
I would love to be able to share the social media marketing you have done. However, I do not like the fact that if I do share them, there's a link to find an agent. If I share it, I want the lead coming back to me and not to another agent in my area.
Does anybody know? Do you know this one?
I don't. Kyle, do you?
That's excellent feedback. I think it's something for us to consider.
Yeah, so we're stumbling around here. I'm not as familiar with this, to be very candid with you, so it's clear to me from the question that we have some work to do here to understand this. So I'd love to be able to share the social media marketing you have done, but if you share them, there's a link to find. I see what you're saying. So if we share that, then it could come back to link to an agent as opposed to that individual. That's great feedback and a great point. Kyle Anderson is here, and we're going to take that feedback and look at the process and the way it works and work on that. So we'll get back to you. Thank you for that.
When is the Connect product going to come to North Carolina?
We don't know is the answer. North Carolina is a very difficult state, as those of you in North Carolina know, with the Bureau. So it makes the coding and the programming of the Connect product just significantly more difficult and, quite frankly, more expensive. We are working on it. We are committed to bringing it to North Carolina, so I don't want you to think that we're not going to. We will. Work is being done as we speak. There is some hope that we will have North Carolina ready kind of towards the fourth quarter. So we're going to have to just say to you, it's kind of in that time frame. It may leak into 19. We hope not. But there's a lot of work to be done on North Carolina, and that time frame is what you should kind of leave here with, is toward the end of this year.
Would like to be able to enter yes for a mortgage on a home quote and get a rate without adding the mortgage information until we need to issue the policy. Would also like to be able to see if the policy is set up on Mortgagee Bill on either the deck page or see a billing invoice showing who is the payer.
Yeah, again, this is good feedback. We're going to take this down. This may or may not be in Portal 2.0, but I don't want to. Okay. I'm getting the thumbs up that it's going to be there on Portal 2.0.
This is more of a statement. I guess Mike will handle this. Love this format to ask questions, very efficient.
It was all my idea. Just kidding, by the way.
Quotes are still not bridging over from EasyLinks several weeks after the great password change. When will this be rectified?
I'll take this back and get a better answer. I know we had some testing issues with EasyLinks that were kind of running behind us when we made the switch to our new identity access tool. My understanding was that they were fixed within that first week, but it appears from your question that's not the case. So let us do some research and we'll get an answer back out to everyone.
I may have missed this if it was addressed earlier. What is the long-term plan for the farm product? We wrote a substantial amount of business when the product was relaunched, but have seen a 22% rate increase in the last year. Between the decrease in service and the increase in price, we're now seeing these customers leave the agency.
So can you just go back to the top? So the long-term plan for farm is we love our farm and ranch business. I think the first step in its evolution is farm has to get on the Connect platform. Once farm is on the Connect platform, part of that is farm will roll out to other states. Today we have states where we have personal auto homeowners, but we don't have our farm and ranch products. So putting farm on Connect will lead us to sort of state expansion. With the sort of thing around sort of the rate need question, we frankly got a little bit behind on trends in farm and ranch. And so we have been taking rates. Most states we have not been taking the rate that you mentioned. Rates for farm and ranch business in general have been in the 7% range. So there are a couple states we've taken a lot more in, and that's because our indications have said we needed that. Also, sort of retentions for farm and ranch is still running in the high 80s. So we have seen a dip with the rate increases, but the dip's been relatively small. But I understand that when we take large rate increases, it impacts your ability to service your customers.
The only thing I'd add, just to kind of demonstrate the Farm and Ranch commitment, I think when we arrived, we were on a $50 million Farm and Ranch product, and we're pushing $70 million now in just shortly over 2 years. With that growth, some of the service things you may have seen, or even some mispricing on our part, which we take accountability for in a handful of places. And of course, right now the same type of auto severities we're seeing in personal and commercial we'll see in Farm and Ranch. So there is some rate need, but Kim's right. There hasn't been a whole lot of 22%ers, but there are. It doesn't surprise me to see the question, because there are certain states or certain areas where we absolutely could have taken that. So it is difficult when that happens, and we're sorry when you lose a customer in that scenario, but we have to make sure we have the adequate rate.
I thought you were going to say Kim has his hashtag Get Your Farm On shirt on. That shows our commitment to farm, but it does. I begin entering the effective date. It says 6/10/18. When I end up getting to the quote tab, it is defaulted back to today's date instead of the 6/10/18 date I said from the beginning. Then I get a message that advance quote credit will be applied upon requote of the submission. It should save the date from the beginning. It is very frustrating. If this could be corrected, it would be great.
Okay. If I understand the question fully, there is a process to save when the quote is originally started, but it sounds like when you get to, it's not all on the screen at one time, so it's hard to read, but it sounds like when you get to the end, then it's defaulting to the current date. I'm not familiar with kind of that as a feature, so I'd have to check and research it.
So we apologize that we're not really sure on this one. So someone is capturing the question. So if whoever sent that, if you want to send Jason or Greg or both of them a note, we will run this down and get you a more specific and better answer.
Yeah, because the quote date that you enter, even if it's in the future, should be stored. So I'm not exactly sure what you're seeing.
On the personal lines, there are areas that are a bit confusing. On the applicant page, if there is a spouse, there's only one occupation line. I assume you use the first named insured. On the auto, when you choose commute, the mileage is 8 lines down. Can this be moved directly under commute? Thanks.
I think this is about the. Can you scroll back up?
So in the Portal 2.0, we've done had a lot of conversations with agents that have been using the platform in the 1.0 version, and have really tried to incorporate all that feedback into the 2.0 platform. And you will see when this comes out later this summer, the ability to select drivers is greatly streamlined. The ability, as Jason mentioned earlier, to see reports, both the credit and driving record, as well as information like occupation. So it'll have a very different look and feel, and we really tried to consolidate the information so that the whole sales process really allows you to have a better conversation with the client and build rapport versus trying to figure out how to get through the system, which is kind of a core philosophical underpinning of all of the systems we're trying to bring to market.
But all of this is this sort of like user experience feedback that we love to get to say, how do we just sort of continue to optimize the system and make it easier and easier to use?
Mm-hmm.
Is it a possibility to add the ability to include a personal message when we're emailing a quote from the new Connect system? I don't like that there is no personal touch.
I don't know the answer to it, but I love the idea, and it should be something that we can turn on pretty quickly. So let us go back and get working on that right away.
Another item on sales reps, do they still exist? We haven't seen them in about a year. I see most of my other company reps quarterly, especially with all of these ongoing changes.
Yeah, this is Mike. Again, I'm sorry to see this comment, because you certainly minimally should have heard from somebody, even if it was via a phone call. So there are still sales reps. We call them territory sales managers in personal insurance and account executives on the commercial side. So I would actually appreciate, again, a note to me or Gerald Ladner. We've just kind of gone through a little bit of restructuring in that space to make sure that we have the right number of reps for the right number of agencies, both inside reps and outside reps. So we're going to take this one back and make sure that we're meeting your expectations.
The pay plan needs to show on the auto and homeowners proposals at least the monthly down payment, and the final coverage screen needs to be much more user-friendly. Also, not have to log in multiple times, especially when working on legacy system.
Yeah, all of this feedback continues to just follow up on what Kim said. We obviously, a lot of what we've said, our expectation is that we're going to exceed your expectations with Portal 2.0, and this type of feedback on pay plan and logins and legacy, and again the monthly down pay and where things show. Is all information that we're capturing. And the nice thing about the new technology platform, and the reason we're optimistic about Portal 2.0, is that when we launch it, you will see, as we've already mentioned, significant ease of use improvements and just better layout issues. But it'll be just a first step. The way our company is now being built, we have the ability with this platform to, on a more regular basis, give you ongoing improvements. So 2.0 will reset our foundation on your portal experience, and then we will get better and better and better. And this, again, is coming on top of a company that's seen a 180% increase in new business on a portal that we would agree with you is not as good as it can be. So we're really excited about that. So
I may have missed this in quote documents improvements. Please update the proposal to provide billing/payment information options to the clients.
Yeah, I mean, again, this is great feedback. There's a lot of updates when you see Portal 2.0 and kind of how billing plans and payments are represented in the quote proposals. So when you start to see the video demos of that, I hope you'll be pleased. But if there's additional feedback, we'd love to hear it.
State Auto in North Dakota has been very disappointed in that some of our renewal farm owners policies have been dinged with not one but two rate increases this past year.
Mm-hmm. Yeah, as we mentioned before, I think in our farm and ranch business we had gotten a little bit behind on rate, and so we manage all our products by product by state. So we continually review the rate adequacy of each state, and if we need to take rate, we will take rate. Now, on the flip side of that, everything we try and do is to try and be as efficient as we can, so that taking rate is sort of the last option that we have to do. Right? We'd rather make operational improvements or pricing segmentation improvements to avoid taking sort of overall rate. But sometimes, just given trends, you have to take overall rate. And just as a side comment, sort of trends in farm and ranch seem to be higher than they are in most other product lines these days.
When will I be able to make payments for customers online or postpone an automatic payment online instead of calling in to make every payment or any billing changes? It's a very long process and hold time right now.
We talked about this earlier, but I'll reiterate. The end of this month, we have what we call quick pay going in, so that will be a one-time payment for both you and your policyholders. And then in June, July, and August, we will continue to add billing enhancements to include being able to change payment methods, change your payment due dates. So by the end of this summer, I think you'll be able to handle just about every billing transaction, either you or your customer, through the Connect platform.
Yeah, so just to clarify, you're commenting about Connect. And on Legacy, there's already that capability in many cases, and that exists. So you don't need to call customer service.
How do you think the analyst call went yesterday?
My reaction was that it went really well. I feel really good about our ability to explain what I believe was a very strong quarter. The analyst's biggest concern was on a kind of our current accident loss ratio for automobile insurance, and we explained that we're taking, I think, what is an appropriately conservative approach to that based on the incredible amount of new business that we're putting on, as well as ongoing severity challenges in the bodily injury coverages. I actually got a question about growth and our ability to grow and scale. They're excited to see the fact that we're actually PIF positive again in personal lines, and premium is growing in both commercial lines and personal lines, and so they asked about acquisition possibilities, and I obviously, you can never say never on that because we're a public company, but I made the point that we're really focused on organic growth because we believe there's terrific opportunities to get much larger in the states that we're in today.
How about extended hours for customer service for a state like Arizona?
We are actually taking a look at a wide variety of enhancements to our service offerings, and specifically including extending our hours. Right now we're trying to, as has been raised in a few earlier questions, get our service levels up to acceptable levels, and following that we'll then look to add hours and other features to continue to increase the level of service that we provide to you.
Will we be able to see the driving records and clue in the new Connect 2.0?
Yeah, this is Jason again. Yeah, I'm really excited about this feature. This has been the most common, common feedback about kind of version 1. So in version 2, Portal 2.0, you will see information about what reports were ordered, whether they came back or it was not returned, and then some information about what was on there so that you can have a more intelligent conversation with your potential insured about the reports and their impact on the quote.
When will the farm business be able to bill mortgagee companies? Currently, we have to bill them.
So right now the team is building out sort of the core farm system. I don't know all the detailed requirements, but I know that this topic was on their list, so I have to assume it's going to be in that. Under that assumption, that will happen when Farm and Ranch starts rolling out in states next year. We're probably putting the majority of our sort of systems resources toward building the new platform and not really making a lot of investments in the Farm and Ranch legacy platform.
This is Mike. We've kind of come up on our hour. I think there's just a couple of questions left, so if we didn't get to your question, feel free to send it directly to me or JP or anyone that has been on this call. So I apologize if we missed. I think it was just one or two that may have been left. I did want to close with a couple of comments. It's clear from the comments that we're still not there yet with you around service, whether that's under our service organization or in the underwriting organization or even in the field with your representatives. So again, I want to make sure you understand that accountability is with the folks at this table. Our team themselves are doing everything they can and are working diligently to meet your expectations. So I take accountability for that, and I apologize for that because we know we're getting some progress because I hear about that a little bit. But from this call, it's apparent that we're not there yet, either in the service, underwriting, or field organization. So we'll go back and see what we need to do to make sure that the folks have all the training they need, all the tools they need to meet your expectations, and of course that we have the numbers we need to meet your expectations. You could hear from us that we're obviously very excited about 2.0. I think we've kind of thrown down the gauntlet to ourselves that says it better work and it better be super effective, because a lot of our answers are built around the fact that you're going to see the enhancements in 2.0. But I can say with great confidence that you will see real improvement when we launch that. It won't be perfect. I think Kim made a really important point that I hope everybody heard, that this is a continuous ongoing improvement. This is a very, very different company. Quite frankly, I think it's very different than a lot of the other carriers you deal with, because our technology platform is one where we can, on a regular basis, make improvements to it. So it's not like you see 2.0 come out this summer and then you have to wait a year till we get to the next revision. We will be much more regular than that. The other thing I'll say is that there were some comments about rate action, and we do have to make a profit. I mean, we have to make sure we're not going to be a good partner of yours if we continue to run combined ratios over 100%. We're going to be a better, more stable carrier if we can have an underwriting profit and grow together. That's a difficult sweet spot to hit, but we're starting to see it now. We made money this quarter in homeowners, in commercial auto, in farm and ranch, in workers' compensation. Middle market and small commercial missed, but again, that was based on, quite frankly, some unusual non-cat weather and some large losses, so we actually feel pretty good about where we're at there. And then the big kahuna is getting our auto to where it needs to be, and again, we're not too far away from being there. We've got some work to do, but we're getting closer. So that and the fact that we're growing again in PIF, in personal lines, in both products. This is after 8 years, folks, of watching our PIF decline, 8+ years. We're now growing PIF in both home and auto, and we're seeing premium growth in middle market commercial and pretty significant middle market growth. So there's a lot of good mojo here. We're very excited about where we're at. This call is extraordinarily helpful to us. This is really about you telling us where we can be better, where we're missing. That's what listening to the customers seems to be a pretty smart thing to do, and that's what we're doing with all of you. So we appreciate your participation on this call and your willingness to give us some of the tough feedback that we need to hear, whether it's making the platform better, making our people better, or just in general making State Auto better. So thank you very, very much for your time. We are back. State Auto is back. We're relevant again, and I think that I hope you're sensing that and feeling that. We're excited about it. And if you do have more specific things you want to share, feel free to email any one of us, and we'll get back to you as soon as possible. Finally, thanks. Can't ever stop these calls without saying thank you. With all the hard work we've done, none of it would matter, as I said at the top, if you had not been patient, hung in there with us, and then not only supported our change, but embraced it, even though for some of you I know is very difficult, and we took you through a lot of tough times. So thank you very much for your business.